Are you wondering what's going on with the local San Jose, California real estate market? We've now been in shelter place for almost 5 months. And what has the market done? Has it recovered? Which direction is it headed? Well, today we're going to cover real data, so stay tuned. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California realtor. I love to review real, actual data so that you know what's really going on with the local San Jose market. So go ahead and jump right into the computer with me and let's look at some charts and some data. Okay, so here we are with the real estate dashboard overview of the market in San Jose, single families for August 2020. Now the data included here is through the July closings. So the average price was actually down 3.3%, but don't worry because it's still up from May and up 5.8% year over year. So still a great market that we're having, especially considering the coronavirus effect that we had a few months ago. Now the number of sales was actually up 18% in July compared to June, which is pretty awesome, especially when we had such a huge jump in June of 75% over May. And in July, there was 470 sales in 2020, and July 2019, 467 sales. So we're right on track for a pretty normal July. But year to date, the sales are down 15% from 2019, and that's because we took a big hit in the number of sales in late March and April especially. So what about inventory and pending sales, and which direction is the market headed? Well, today it's still a seller's market because we only have 23 days of inventory if we continue to sell at the current rate of sales with the number of homes on the market. That's just not much at all. Pending sales are up 5.8%, while inventory is down 5.7% from the previous month. And the sales price to list price ratio was 102.4%. Now, it makes kind of sense because we are short on inventory, and so this market needs inventory. And because of supply and demand, buyers were paying a little bit over asking price. So this is the 11th month in a row that we've had lower inventory, and we're 49% below last July, which is pretty crazy. So that is why the market is still continuing to be strong even with the coronavirus influence. There are plenty of buyers still buying and a very low inventory. Now our pending sales, like I said, were up again, and we're up 12.7% year over year, which is great. So the market continues to be strong when typically it would slow down in July. We continue to have strong numbers in July. So with 363 homes active in San Jose, 496 pending, 58% of the single family homes are in contract, which is again great signs of a good strong market. And now that's up it's up from the 55% last month. And that's just again because our pending sales continue to go up. So we have a strong market still here in the summer. Now, how does that look over the last several years? This chart here is for San Jose single family homes from 2012 all the way through the current market. And these yellow bars that I've highlighted here are highlighting the May, June, and July markets for last year versus this year. So what I want you to note is first this yellow line, which is the number of homes available for sale or the inventory, is significantly lower this year, significantly. Looking a little bit more like what we saw in 2017, but nothing else like that in history. That has definitely fueled the market that we see. And if you look at sales, though, they were really low this spring, which was because of coronavirus. That is very uncharacteristic. Typically, we would be up here, but as you can see, our sales the last couple months have been more traditional of what we would have seen in March and April. Because of that, prices have continued to hold steady, and we had a little correction from the very hot spring as we went into the coronavirus influence, if you will, but prices still are holding and doing pretty well and have had a little bit of appreciation up and down. And if you draw that line over, we're definitely doing better, as I said earlier, year over year than 2019. And we're looking more like some of the 2018 numbers and definitely up over 2017 prices. Now, this is an interesting chart of Santa Clara County single family home prices versus the S&P 500. With such a strong influence here with high-tech companies, this is an interesting chart that I follow follow, because you will see that it actually tends to be a pretty good predictor of what is going on with the local real estate market. There's only been 5 instances in these yellow bubbles where the two numbers went in opposite directions. And that first or the latest number here was in late 2019, when the housing market actually really softened, but the stock market continued to be strong. And then when coronavirus hit, the stock market really dropped, as we all know. But the real estate market was starting to heat up, and even though the market heated up, it started to settle. And as you can see now, the stock market has continued to recover and appreciate, and it looks like the housing market is doing the same. Now, part of the reason this is going so strong is those interest rates. Look at over the last year, interest rates have slowly dropped, pretty much consistently dropped. Now this is for a 30-year fixed mortgage that's conforming, and in San Jose area most people are doing a jumbo conforming or a full jumbo loan, so those rates aren't quite as competitive, but still in the low 3%, which is excellent. And then the last factor that I always track is unemployment. Now we still are experiencing some unemployment, larger number than normal, but as you can see, it is starting to correct. The question is going to be, how quickly does that correct? And we all know that this is not an influence of the economy, but of coronavirus. And so as the governor allows more people to get back to work, this number shall correct pretty quickly, hopefully. And I haven't seen, as you can tell from the market, a huge influence on that, because I believe the other 90% of people that are working are the ones who are working in high-tech companies and who have money in the stock market and are able to continue to purchase. So we haven't seen a huge influence on the market based on the unemployment. Of course, that needs to recover fairly quickly in order to minimize the influence on the real estate market. So anyway, the overall outlook is that the real estate market is going to be trending pretty steady, I think, through the fall. If you'd like to know more information about what happens in an election year, I just did a video about that, so I will list that up above and link it below for you to watch. Those quick snapshot is that prices will probably soften, but sales will continue to be strong. And so we'll see if that really plays out this election year as well. Thank you so much for watching. I really appreciate your time. If you do have any questions, be sure to post those down below this video or reach out to me directly. And if you love these market updates, don't miss signing up for the email that comes out once a month as soon as this video is available. You can definitely sign up with the link below. Or of course, subscribe to this channel. Thanks so much.